Banking public is being encouraged to adopt a more proactive approach in assessing the financial performance and governance standards of their banks to guide informed decision-making. Industry players say while the sector has regained stability following the 2017 financial sector cleanup, transparency and accountability must remain central to rebuilding public trust. There's more in the following report.
Nearly a decade after Ghana's sweeping banking sector cleanup, regulators and industry leaders say the responsibility for safeguarding the system does not rest on institutions alone. The Bank of Ghana has since tightened corporate governance directives, introducing stricter disclosure and transparency requirements for banks. Speaking on the sidelines of the Corporate Governance Series, Chief Executive Officer of the Ghana Association of Banks, Johnny Wa, said the Disclosure and Transparency Directive now compel commercial banks to publish key financial and governance information.
The banks are expected by law or by the directive to disclose in their annual reports. So if you are a user of financial statement, and you are by user of financial statement, every key holder, a stakeholder, including, in fact, as we have known today, the number one stakeholder of a bank is the depositor. So if you are a depositor, take keen interest in what goes on in your bank.
Meanwhile, Executive Head of Retail Banking at GCB Bank, Sina Kamagati, says evolving market dynamics also demand changes at the board level.
Looking at conversations around virtual asset, stable coins, mobile banking, USSD and the rest, we need to take a second look at how we give the youth the opportunity to sit on the board so that they can break down some of the complexities around the IT environment and how the experienced bankers who are sitting on the board can adopt some of those and make sure